Okay, so hello everybody and welcome to this webinar on automating finance with Sage Intacct. So I'll just quickly start with a few introductions. So my name is Hannah Monroe. I'm Managing Director and Transformation Lead here at ITAS. So my job is all about architecting and supporting those financial transformation efforts and leading the transformation team. So who are ITAS? So we are a financial transformation tech consultancy who actually specialise in Sage technologies. So we use the Sage software to create this vision for this very much data-driven and value-added focused team. So who are we? So we've been Sage Intacct Partner of the Year, 200 Online Partner of the Year, and we've won a number of different awards across the board. But me personally, so I've actually spent just over, I think it's about 12, 13 years now implementing Sage technology. So I actually come from a analytics and process engineering background, which is slightly different. Obviously, having worked with Sage for that length of time, obviously very involved in the accounting aspect, but I very much come at it from a slightly different aspect than most, in that it's all about automation. It's all about real-time information and analytics and insight. So and that's part of the reason I started CFO 4.0, the podcast, and also Financial Transformation Live. So please do check it out if you're interested if you're on a financial transformation journey, because that has some great hints or tips around that. So let's go back to why should we automate. So there's a couple of key reasons that we need to start automating finance. So finance is slightly behind the curve. If you think about what's happened in manufacturing operations, what's happening in sales operations at the moment, finance is starting to catch up because the technology is now available. So there's a couple of reasons we need to start automating. So first is scalability. So as a business grows, the volume of transactional entries that are happening in that organization are going to grow. And so actually what we're looking at the moment is how do we support that growth without adding additional headcounts? Okay, so that's what we mean by scalability. Also with growth comes a need for better processes. So it's all right hand-holding everything when you're a small business and you've got eyes on it, but that is unsustainable as you grow. And it leads to increased risk. It leads to more opportunity for error. And again, those are the things we're looking to get away from. So in finance, we're very much used to being like eyes on the detail, which is important, but actually what we're shifting to as we start to scale is more about exception. So monitoring by exception versus monitoring everything. So we'll talk a little bit about that as we go. The second piece is that finance itself is going through a massive transition. I talk a lot about this on CFO 4.0, but we're shifting from that traditional sort of transactional entry function that is the remit of finance, or has been in the past, so more value added and insight-driven finance function. And so in order to do that, it's not just about adding headcounts with those skill sets. We actually need to start automating the transactional elements of the finance role so that we can transition and focus on those more value-added roles. And that actually has some massive benefits, because most people in finance actually want to spend more time on the value-add piece. They want to spend more time looking at the reporting, driving insight, working with the wider organization. And so we talk a lot about why should we automate, and that is all about making sure that your team are engaged, that they get that, and so that they have a chance to shine in their roles, right? So if people are typing stuff into spreadsheets all day, they're not able to deliver on that. So there's a piece around finance team engagement. Cost. As you grow, the cost of entering in items individually, the cost of reconciling those will continue to grow as well. So what we're trying to build is a function that can scale, where the team are engaged and able to do the value add part of their role, and that we're not incurring the cost. Now that cost can be risk-based costs. So what happens if something goes wrong because you're trying to spin too many plates? What is the cost of recruiting more heads and bringing those individuals on? But also, what is the cost of actually having that additional head count that you would need to be able to shift people into those value add roles? Okay, so there's lots of reasons to automate. It's all about understanding where you're at in your growth journey, as well as to why to do it. So So we talked about why automate. So the big thing, and I think this came out of a study with the team at SEMA. So the historical focus of finance has been transaction process. And if you look at that first graph, 50% of time in the current process is all spent on what we call transactional processing. So that is entering purchase invoices, manually entering journals, etc. And actually, the research has shown that what the business wants and needs from finance is for that to shift. So for finance to take more of a strategic role within the business. And as you see, if you look at that shift, like the strategy section is massively increased. The reporting analytics is consistently there, but actually where that time is going to come from, where that requirement is going to come from, is actually by decreasing the amount of time that we spend on transactional processing. Because transactional processing isn't a value add piece. It is a necessary evil for us to gain that insight. So, and actually there's some huge benefits in automation around it, because it's all about consistency, it's about quality of information. And again, you're removing any opportunity for human error. So this is what we're looking towards, and what we're trying to achieve within Sage Intacct is that shift out of transactional processing. Okay. So what should we automate? So this is a really interesting question. So, and it depends on the organization. So lots of organizations I sit down with and we talk about sort of their processes and where to go. You can automate a lot of things, but the question is, what should you automate and in what order, right? So, in order to shift into that perfect, automated finance function, you need to plan that journey, right? And I always say that software is a journey. It's not, automation is a journey. It's not a destination. And it's so true, because what you're automating now will be different from what you may want to automate. So you need to pick off the real quick wins, drive that forward, and then we can start to go for the more complex and harder automations as we go through. So things that you should look out for in your processes around what you should automate. So low value tasks, entering a purchase invoice is a classic. Yeah. So that, those kinds of non-value added tasks, so low value tasks should be automated. High volume, if you're doing lots of those elements. So an example of this could be if you're doing huge amounts of revenue recognition postings, right, each month. That's a really good example of where we can automate. Anything that is time consuming. So if you're spending a lot of time trying to consolidate and then reconcile your consolidations, again, it's time consuming, it's open to error. Those are the things we need to focus on. And last but not least is barriers to close. So if you've been on one of our last month's webinar, which is all about that continuous close model. So how do we shift out of that traditional sort of month end and waiting 2 weeks to get reports to how do we create more of a continuous close process? These are the sorts of things that I look at when we're analysing month-end timelines, is what is stopping us from having that continuous close? How do we get that data in a more automated fashion so that it's available for us to use, as we go through? Okay, so that's where we need to automate. And I should have said, I noticed a few late joiners, so thank you guys for joining us. If anybody has any questions, please do feel free to pop them in the chat. I am monitoring the chat, so I will keep an eye on that. So feel free, you can stick your hand up. I'll open up the call to allow you guys to talk if you prefer, but feel free to pop them in the chat, and as soon as we get to a space or a good pause, I'll stop and answer any specific questions, or I will come back to you after this session. So please do feel free to drop in any questions that you may have as we go through. So how does so what is the principle that Intacct is based on in terms of automation, right? So there's three kind of pots, as it were. So first is about eliminating the close, which sounds scary, it sounds impossible, but it's amazing with the right technology how you can get ever closer to that ongoing close, that what we call the continuous close. The second piece is continuous audit, because that's one of the fears, I think, with a lot of automation, is that the people feel like they're losing control of the data entry. And actually, with the tools that we have embedded within Intacct, we're actually starting to audit and reconcile in the background automatically, so that we're bringing, remember I talked about that sort of exception-based analysis. So we're bringing things to your attention when things don't quite look right. So, and the system is always learning. That's the joy of things like AI, is in the background, it's just learning as a human would, in terms of keeping an eye on what's happening. And then insight, so is about building out tools and functionality to allow you to get better visibility quicker. And those are kind of the three, I won't say pillars, but because we've obviously got cycles, the 3 cycles. And all of that means that we're able to shift away from transaction processing into a more automated finance function. And I always think it's really interesting to look at some case studies. So this is a case study from the guys at Alder Partners. So they actually cut their monthly close in half, right? And freed up 50% of their time. And this was with a senior individual to shift away from, spending their time on day-to-day accounting tasks and onto more automated and forward-looking analytics. So I think there's always just to put this into perspective, this isn't some pipe dream that we're talking about. This is what is happening with those that are using Intacct at the moment. So the first difference with Sage Intacct in particular is that it takes a totally different approach to how it's actually sat in the market. So I'm assuming that you guys have all worked historically with what we call legacy ERP. So these big functions that have lots of different modules in it, but it's very much an all-in-one system. Right. The challenge with that all-in-one system is it doesn't give you the flexibility to adapt and change as the needs of the business change. And it also means that they tend to be pretty good at most things, but not exceptional at any one thing. And that is the antithesis of what Intacct stands for. So if you think about your phone, for instance, now you may have a number of different apps on your phone. You might have Outlook. Another person may have Gmail. Right? Somebody may have Facebook, other people may spend more time on TikTok. You may have WhatsApp, other people's may use Messenger. So it's about giving you as a finance team choice about the tools that you use, but plugging it in a way that is seamless and allows you to use that data effectively. So that's what we mean by best of breed. It's about giving you the choice to choose the integrations is probably the wrong word, but the modules that you want to use for individual functions, right? So how does that work for, say, Intacct? So for example, it may be that you use YayPay for your credit control automation, and we'll talk a little bit about that later. It may be that you use web expenses for your expense module. You might also use them for your AP, so your purchase automation, but you also may use you may use Beanworks, you may use Zahara. So there are lots of different modules that we connect in, but the reason that Intacct does this so well and where it's different is the strength of the integrations and the fact that it's been designed to integrate, and how it integrates is really different as well. So again, this is an example of an automation suite that you might have. So Workato, which is a BPA platform, which is business process automation, that does triggers, does integrations that you can plug in. So you might have Salesforce, your CRM, pushing elements directly into Intacct. You may have HubSpot, whatever it is. And actually what we're doing is we're pushing data in automatically into system, very often holding both sets of data in both systems. So no team is missing out, but each team is choosing the tools that they want to use, which means they can access best of breed functionality. So AI, automation, analytics, within the systems that they want to use. Okay. So what does a typical automation process look like within Sage Intacct? So I'm going to go through the different ledgers. I'm going to go through sales ledger, purchase ledger, and then I'm going to go through general finance. And then I'm actually going to dial into the software and start showing you how that works in Intacct as well. So a typical automated purchase process, for instance, would be that the purchase order is created within a system. So that could be web expenses, that could be Intacct. It's authorized digitally, so you have all of that back and forthing. People have visibility of budget so that they can say, yes, actually, that's within my budget. I can do that. You can do authorization by exception, pushing that through. Once that PO is delivered, the supplier would then email the invoice. Now, the system and the automation would automatically pick up that email because it's sent to a generic email address. It gets picked up. It gets entered into the the AP automation system, which then validates and codes. Now, depending on your complexity, we'd have different options of different modules to select from. So some want project-based coding. So on each line, they want to code to a project. They want to code to a site, for example. Others have a more generic and say just pick up the coding from the purchase order. So we have lots of different options about how we do that. The invoice would then be digitally approved. So people get an email saying, can you approve this email? Here's a PDF. Ticket, yes, happy. And then that goes into, that is sitting in Intacct with your invoice, with your PDF attached. And at this point, the only human element is things like approvals, and that's only by exception. So if it's not within budget, so you can see how quickly we can get to a more automated function, right? But that automation is requiring you to have some inbuilt logic. So you need to think about, like, what are your rules? Have you got departmental based rules? Is it value based rules? Is it nominal based rules? So all of those things need to come into play. So once that invoice is on the system, within your finance system, you then need to pay that invoice. So what the system will do is allow you to select with a quick tick box the invoices that you want to pay. You can then digitally approve the payment. Again, we've not seen a piece of paper. The system is automatically only including those elements that have been approved. And then you can generate and upload that file into your bank. And again, that because the system is generating the list of files to pay, it's also putting in the references. So when Intacct then connects into your bank rec and pulls down your bank feed, it can then automatically reconcile, right? So if you think about this process now, what you've then got is basically the only pieces where you've got the human element are those where it requires I am happy for this to go. So I am happy to pay this invoice. I am happy for this payment to go through the bank. Those are the points of reconciliation or checking that we need in. So all of a sudden, that purchase process is requiring very little human intervention. And one of the benefits of this is that it can be done a lot faster. So rather than having to wait, to the end of the month to give your departments their departmental reports, because that's when you process, that's when you know what the costs are in, they kind of have on-demand flash reporting. Again, we need to get away from transactional entry and manage that through. So that's your purchase ledger. I'm then going to take you through the sales ledger, and then we're going to look at some of the functions within Intacct itself. Okay, so what does an automated sales process look like? So for example, I've used Salesforce in this instance, but obviously just because we work really nicely with those in Intacct, but it doesn't have to be. But so for instance, your opportunity could be closed in Salesforce. It could generate the contract or the invoice within Intacct as part of that workflow. Now, when that invoice has come through, it's come through with the start and end date for that invoice. So it's automatically generating things like your rev rec schedules. So they're already in the bank, as it were. And then the invoices are sent out into the customers in bulk with customizations based on the customer, based on the type of invoice, etc. And then in the background, we're using one of those what we call those best of breed modules. So for instance, like YayPay will do the automatic chasing. So it'll say to the customer, oh, this invoice is due to be paid tomorrow. This invoice is a couple of days overdue, and it will do so with attaching copies of invoices, sending out the payment link requests. It will even send out statements with copies of invoices attached as well. So all of that can be done as we go through. And then the customer would then download anything they need. They would then pay that invoice. And if they pay it through the payment link, it automatically creates the payment on the system and allocates it to the invoice. It automatically matches it when it comes through the bank rec as well. So again, we've got that full automation through Sales Ledger. So this is just one example of where we can automate. Now, if you have specific examples, so for instance, if you're a project-based organization, we have some automations around how we generate project invoices. If you're a subscription-based organization, we have some automations about how we generate subscription and usage-based invoices. But if you're just, bog standard, this is my invoice and I just need to rev rec it, then we have those as well. So please do feel free to send through in the chat or afterwards any examples that you may have around certain types of invoicing flows. You want to know whether we can help, but there's lots of different opportunities. So that's purchase ledger and sales ledger. And then what about how do we automate the general ledger? So there's a couple of key functions, and these are the areas we're going to focus on in today's session. Is that we have automatic allocation of costs. So if you automatically split all of your overheads across your departments, for instance, we can automate that. We can automate it based on percentage based each month. We can then do dynamic allocations where we split it, and I'll show you some examples of that. We can split it based on headcount, for instance. And there's lots of different, or timesheets is another one. So we can do automatic allocations of costs. The next area of automation we have is things like revenue recognition. So when you enter an invoice, you can enter the revenue recognition piece. So if you're doing this in spreadsheets at the moment, you'll know how much of a challenge that is to maintain. But we can enter an invoice and literally pop in the start and end date, and it will generate the schedules and will automatically post them as and when due. We also, if you're working with contracts, can do both accrued and deferred revenue as well. So, there's some great options around that depending on what kind of business you're in. We've also got the back-to-back intercompany. So what do I mean by that? So when we enter a journal, for instance, we can automatically generate the tos and do froms. We can also do bill back. So we can create a sales invoice on one company for against our intercompany supplier, and it will create the equal and opposite transaction in the other company. So we can do both what we call bill back intercompany, but also journals between. And because we're automatically generating the other sides, it minimizes any errors around reconciliation. So I'll show you that again later. We also have continuous consolidation. So some people like to still do their consolidation month end. There's nothing wrong with that, but you can actually do daily consolidation where it's continuously consolidating, and it will automatically do your inter-entity eliminations as well. And we'll talk about this a bit later, but we've got no restrictions around how many different consolidations you set up as well, which makes it really powerful. And in the background on our GL, we also have what we call our AI validation of GL. So what that is meaning is that in the background, and this one is really hard to show, but it's true. What it will do is it will constantly monitor your GL, your general ledger postings, and it will identify where there could be anomalies, and that could be value-based anomalies, it could be dimensional or reporting-based anomalies, or it's posted to an intercompany account, but this doesn't quite look right, etc. So all of that is in the background and working and sending you an email. Normally, it can be daily, weekly, on these the anomalies you need to review. And then on top of all of that, we then have on-demand reporting. So we have the ability to give people access to interactive and drillable dashboards that allow people to pull information out and to use it. Okay. So I've talked a lot about the different functionalities. I've just seen a question come through. So can AP and AR functions talk to each other, and whether certain costs need to be recharged to clients? Yes. So in the purchase ledger, we normally do this with projects. So there's a couple of ways you can do it. You can do it with drop ship, which is basically, just sending out and buying things on behalf of, or you can do it with projects, which allows you to, when you enter, say, a purchase invoice, whether that's an expense, whether that is a purchase invoice, whether that's a general journal, you can just mark it as to be recharged. So as long as you selected that customer dimension, you can then recharge it onto the customer. And that works with, like I said, with dropship, is almost like it's driven from the sales backwards. And with project, it's recharging. And very often people will use that function to do that. So we have a lot of cleaning companies that might need to recharge cleaning consumables. We have a lot of project-based companies that need to on-charge travel expenses, for example, and that function will manage all of that. So I'm hoping that's answered your question. If it hasn't, send me a message. I'm happy to jump to catch up with you either after this, or send a separate message to go through that functionality in particular. Okay, so what are the ways that we can automate? So as much as I'd love to go through everything, I only have an hour today to cover off all these automation functions. So I'm just going to talk you through some of the elements that we have, and then we're going to get in and I'm going to cover as much as I can in the next half an hour in terms of actually showing you within the software. So how Intacct will help you automate finance. So the first thing is, we talked about this earlier, but automating transaction entry. So OCR scanning of purchase invoices is one big time saver, particularly if you've got high volumes. Automatic intercompany journals and transactions, because if you're using something like, say, Sage 50 or Xero, you're constantly having to enter those transactions and then go each side and make sure that firstly they match. And so that is a whole different conversation about reconciliation, but you're actually having to switch between systems and do it back to back. And again, we can address that. CRM integration. So we have an out-of-the-box integration with Salesforce, which I mentioned earlier, but we also have integration tools for most of the majors as well. So you can, we allow direct integration as well by the API, which I mentioned a bit later. So if you've got custom CRM systems or business management systems you want to integrate, and you just want Intacct as like a finance powerhouse giving you your reporting, that is also available. Expenses and company credit cards. We have a number of different expense integrations. Main one is web expenses, but we work with Expensify. We work with a couple of others as well to do that. So that can be integrated. And those very often have inbuilt company credit card reconciliations. If you think about how much time, if you have company credit cards, you spend chasing people for receipts, making sure you've got everything in, all of that side of things can be addressed. And then things like bank transaction rules. So we can build in rules around a bank reconciliation to say, if it contains this reference, create this journal, because I know that's my Vodafone payment, for instance. We can do matching rules. So if it's within a certain date frame, if the reference contains this, and this, then this. So there's lots of rules that you can build out. And again, it's an ongoing learning piece. So at first, you need to invest the time in setting up the rules, and then the system will reconcile as much as it can. And you're just reconciling the exceptions to that rule as well. And then one thing that isn't on here is things like collections of payments. So I really like using things like YayPay to give customer portals to do credit card collections, because it just gives you another way to collect payments rather than relying on that. Obviously, direct debits, they've got integration with cardless. All of that can be done as well. So that's all of our automated transaction entry. And then we've also got our automated adjustments. So our automated adjustments are the then corrections to the data that we've entered. So examples are consolidation. So the fact that we can automatically consolidate and we can automatically post intercompany eliminations, with the fact that we have the GL, which I mentioned earlier, which automatically detects any errors, dynamic and transactional allocations, which is those automatic splits and reallocations of costs. You can even reallocate to customers as well, so based on the hours that somebody's worked. So you've got a lot of capability in there, things like revenue recognition. And then we've got our automated reporting and on-demand dashboards. So on automated report delivery, the fact that we have multi-dimensional nominal, which allows for a lot more reporting to be on demand, and the fact that we can hold both financial and statistical data. Okay, so, and then on top of that, we have rules within the system to do validations, to do triggers. We have integrations with automation, what we call BPA softwares, which is the ability to send out emails and set alerts and triggers based on that. And we also have integration with credit control automation software as well. So huge amounts of functionality that you can use. So depending on where you're at in your journey and where the bottlenecks are for you as an organization, there's a lot it can do. So I'm going to pick up a few elements of this. So I'm actually going to dial into Intacct now and take you through some elements. So bear with me 2 seconds. I'm just going to shift my screen and share it with you so that you guys can actually start to see Intacct and what it can, some elements. So this is going to be a bit of a whistle-stop tour of some of the elements that I've talked to you about, but hopefully will give you a feel for the different options and some of the, almost bringing some of the functionality that I've talked about to life. So hopefully you can all see Sage Intacct on the screen. So I will try and keep an eye on the chat. So if there is any questions or if you guys cannot see, please let me know. So Sage Intacct, I'm just going to point out a few obvious things. It is pure cloud-based. So you'll notice that when I'm here, I'm not got anything installed. I'm just accessing it through Chrome. And we're very much going to focus on the intercompany aspects first. So intercompany and consolidation. So Intacct within the same instance can hold multiple companies. And it can hold multiple companies in different tax and base currencies, tax legislations and base currencies as well, which tends to be the issue when it comes to consolidation, because it's not just about adding up the numbers. There's often an element of foreign currency involved in that. So what Intacct can do is build out multiple consolidations. So if you are you've got, say, an Australian, a Canadian entity, as well as maybe your UK and your US entities. So Intacct will automatically consolidate those for you, and you can decide how you manage exchange rates. You can automatically pull exchange rates from Oanda, which is an online exchange rate service, like a feed of exchange rates, or you can preset your own exchange rates and use that as an option. So, and again, as you can see here, this is an example of the consolidated information. So it's just consolidating, in this case, the balance sheet. And you'll notice as we go down to the P&L, it's got both the ending spot rate and the weighted average rate that is available. And you'll notice that you can see, and I'm just going to pop back up to the balance sheet. I've got each of my entities across the top, and I can actually see the elimination elements as well. So where there has been some postings, I can see where that has come from and what has been done there. But those eliminations and your CTAs, your cumulative translation adjustments, are all done automatically by the consolidation itself. So, you know, from a visibility perspective, if you think about this, is you don't actually have to do anything to produce this report. You can schedule the consolidation to be continuously running in the background. And it will just produce this information on demand. And then you can start to analyze it. So at the moment, this is very much a consolidated typical P&L, but you can actually use this consolidated information to consolidate more than just your typical P&L and balance sheet. You can use it to get consolidated customer information, consolidated supplier information, consolidated products if you're selling the same products across different entities as well. So it not only consolidates nominal values, but it actually consolidates those against dimensions. So let's have a look at how we set up, and I'm going to show you how easy it is to configure a consolidation. So within the system, we don't have to have a hierarchy of consolidation. So a lot of systems, especially with consolidation, say, or this one consolidates into this one consolidates into this one. That's not how we work in Intacct. You can use the same entity in multiple consolidations, and you can choose the end currency that you want to consolidate to. So you'll notice that I've got all of my locations consolidated into US dollars. So it could be that you have a US investor that you're looking to give information to, yeah, and so they need it in US dollars. So you can do one consolidation into USD, and then for your UK-based board, you can have everything in GBP. So that is the flexibility that you have within the consolidation. You can, like I said, you can have multiple in there. And it's very easy when you build out and say create a new consolidation. Yeah, you can choose the currency, you choose the exchange rate that you're using. You can then choose which exchange rate and translation methods you're using for both balance sheet and P&L. And then you just select the entities that you want to consolidate. So you can literally just go through and say, these are the entities I want to consolidate. and run that through. You can also choose the dimensions we consolidate. Now, dimensions, for those that haven't worked or heard of this concept before, are basically, think of it as like columns in your nominal, your general ledger. So when I create a transaction or post a transaction, it posts with a customer, it posts with the supplier, and those the products, the project, etc. So those all sit in the nominal. So when we consolidate for reporting purposes, we can also consolidate those values. So you can get cross-entity analysis of projects, of customers, of contracts, for instance. So it makes it very, very, very powerful. We've also, you'll notice we've got things like elimination accounts, so you can specify which accounts you're going to eliminate. You can do some tweaks around how you manage exchange rates. And then you can decide how you manage those journals, etc. In terms of eliminations, allocations, etc. So what I'm trying to show you here is firstly, how easy it is to set up a new consolidation. It literally is the quick click of a button, but in the background, this is just doing it by itself. So if you think about sort of setting up your consolidation Excel sheets, which is what most people are using for consolidation, you set it up once and then you have to continually monitor, right? This nominal, this customer, these VLOOKUPs, you're constantly checking and reviewing. And actually what Intacct gives you the ability is to step away from that reconciliation process and focus on the numbers that are coming through. So if I just show you quickly about how you consolidate. So you've got a couple of options for how you run consolidation. So you can literally tick a box and go consolidate for this period, or you can actually set up a recurrence. So you can schedule it to run a monthly, weekly, daily, or at point after, so many days after month end close. And you can decide how long you want it to recur. And it will just send you an email saying this has been consolidated, but you can consolidate, you can reconsolidate. So if you make adjustments, it just runs the reconsolidation. You look at the reports, it's all there, right? So if you're at the moment going through exporting TBs, putting those into a spreadsheet, checking the numbers and going, oh, that doesn't look right, I need to do this, this, and this, and then going back out and then checking everything twice because you're really worried that you might have done something wrong. It just removes that whole process. So we're getting to automate consolidation. And not only that, but because we have all the information in the system, because we have these powerful reporting tools, we can start to look at, I won't say automating reconciliations, but moving forwards to a more automated process. And what I mean by that is, so if we look here and we go to our inter-entity reconciliation dashboard, at a glance, I can see the due tos, the due froms. I can see, you see here, I can see where things don't quite add up. So what I'm looking for is, does everything balance? Yeah. So I can instantly get like a comparative and see where the reconciliations are different. I can understand the debits and credits across each one, and I can identify where there are issues across each one. Now, I've actually got an even better dashboard. Bear with me 2 seconds. So you can see this one. So I've got two different setups just for depending on what I'm demoing. So I've also got, and here's another example of the this is the one we mostly use. So this is what I call my inter-entity reconciliation matrix. So it allows me to have the inter-entity nominals on the left-hand side, have all of the different entities across the top, and then for me to make sure that that balances. Now, that being said, it should always balance if we use our inter-entity functions within Intacct, right? So where things don't balance is because somebody goes to enter something, the phone rings, they pick it up and they forget to enter the other side. Actually, within Intacct itself, and I'll just pop back to my other org, we have the ability to enter what we call back-to-back inter-entity transactions. So the most common scenario is journals. So I'm just going to go through and have a look at some journals. So if I'm just going to go to my journal, I think I've got an inter-entity transaction in there. Yeah. Here we go. So if I have a look at this, I've got my entity. So here on, because I'm entering this at top level, so I'm not working at entity level, I can enter in a journal against multiple what we call locations or sub-entities within the system, and say, right, this is where I want to take it out of intercompany professional fees and I want to put it across these entities, right? So that's going in. But What the system is then doing is in the background, it is then figuring out this is all the inter-entities, and it can do it against foreign currency. So you'll notice that it is figuring out, right, based on the date, this is the inter-entity, this is the currency that we need to work in, this is the exchange rate, and it does all of those postings. And because it is managing that inter-entity mapping, the due tos and the due froms, then we are less likely to make mistakes, because those reconciliation dashboards become more of a triple check rather than consistently finding errors, because the system is generating and automating those inter-entity conversations. So hope that was useful. If you've got any questions on that topic, then please feel free to put them in the chat. But that gives you an idea of how we can automate consolidation and inter-entity functions. Okay, so revenue recognition. So I am just going to swap over to my Clearly org. So how does revenue recognition work within the system? So a lot of people at the moment, before they work with Sage Intacct, especially if they're on something like 50 or 0, are manually tracking revenue recognition. So there's a couple of downsides to that. Obviously, it's the fact that you're doing it manually, right? So it is open to error. You're having to maintain spreadsheets, which takes time at point of entry. So when you generate an invoice, but also then doing the journals at the end of the month. And then most people spend an inordinate amount of time actually reconciling it. So if you have a look here, so what I've got here, so it can be from any type of transaction within order entry. So it can be from a sales order. It can be, if you do it based on order, if you do it based on invoice, it can be done there. But what you can do is on each line, if I show you there, you can set up a RevRec template. So that could be day based. So it could be it's basically splits out across the amount of days. It can be month based. We also have event-based recognition, which is when something is delivered as a service. So if you've got projects as well, we can do milestone-based revenue recognition. So on each line, depending on the type of service that you're offering, you can specify a start and an end date if applicable, or a project if it's applicable. And then you can it will automatically generate the schedule. So if I have a look on this individual line, I can see the exact amounts that are going to be posted. Yeah, so I can see the when it's going to be posted and the amount, and it will come through as a special journal type because of the RevRec journal type, right? So on each line, I can specify that. So that as I enter an invoice, I can automatically schedule for those elements we've done, and that can set certain products to have certain types of revenue recognition. See what I've got on this one. I think that's got, it's got straight line, which is basically monthly RevRec, and it'll just literally split out across the 12 periods. Okay, so what we do is when we enter a transaction, we actually enter the start and the end date. Now, what the system will then do in the background is generate a revenue schedule. So you can look at that at an individual transaction basis. You can look at it as a customer basis. Yeah. So I can see the basically where it's come from, what is going to be generated, and when it is going to be generated. And I can either have that automatically scheduled to post, so we're getting into that automation, or I can press a button and post those schedules depending on how much control. And most people start with just pressing the button and then get to a point where actually, I trust the figures. I know what it's going through. I'm just going to let it post and review it as and when I need to. So the system will automatically post the revenue recognition schedules as and when they're required. Now, the system also will post into both your deferreds and your into your revenue nominals with the product, with the customer. So if you ever did want to do a reconciliation process, it's actually very, very simple, but you shouldn't need to because the system is managing the whole piece for you. And it will automatically shift that out of deferred and into your revenue nominals based on whatever revenue recognition schedules you set up. So super easy, super simple. You can also pull things like reports of deferred revenue. So I can pull a forecast, which will give me visibility of what it is. I'm just going to change a few dates. I think 2017 for this, but let me just have a look. Revenue, yes. And I can do things like post it from the deferred report on the revenue account versus the deferred revenue, etc., which is quite nice. I am actually going to just pick up my US entities just because I believe I've got some data in there. If not, I might need to change my things. So view that, and I should get access. Here we go. I've got visibility of all of my revenue recognition discussions. Now, I've only actually got some stuff in for April in this instance. If I change the dates, I probably have a bit more. But it will actually give me the split, as you can see, by customer, by the revenue account, because I can have different nominal accounts, and by the product as well that we're working with. So again, it's basically getting rid of all of those spreadsheets. It is automating the full process. And actually, all you're then looking, and then if you think about it, if that's something you're waiting till month end to produce your reports, it gives you the ability to mid-month run flash reports, weekly flash reports on how we're doing in terms of revenue goals, etc. So again, we're starting that shift into a much more automated and powerful function. And the ability to not have to rely on spreadsheets to do these things, and to not have to triple check. So if you think about how much time you spend triple checking everything we've talked about, that's where things start to go wrong, and that's where the time element comes in. So it's not just about it's not just about the data quality and the consistency. It's the time it spends to check everything, and the option for that to go wrong. Okay, so we've talked about consolidation and intercompany. We've talked about deferred revenue. I'm actually going to make a bit of a shift and talk about one of my favorite tools. And I shouldn't have favorites, right? Because it depends on the customer. But this is dynamic allocation. So out of the box, when we create a journal, I'm going to show you the difference. We've got two types of allocations. We've got what I call dynamic allocations, which is where it's based on changing variables. And we've also got what I call static allocation. So if I just go onto a general journal, bear with me. Yeah, that's the one. Review transactions, and I just go into edit. So what I have on each line is the ability to select an allocation. So can you see how there I've got custom and split by sites? Yeah. So if I look at that, what that is doing is when I select the allocation, it's automatically splitting it across certain sites. Right. So out of the box, I can set up what we call static allocations, and this comes as part of core, the ability to preset splits across departments, across, in this instance, any dimension. In this case, it's site, it could be customers, it could be projects, etc. So that is static dimension, that is static allocation. So where the allocation is consistent month on month on month. Yeah. Where dynamic allocations comes in is it becomes the ability to do those allocations based on dynamic variables. So an example could be based on the hours worked, because you're uploading timesheets. It could be based on headcounts. It could be based on sales revenue. So very often people want to split out sort of sales profit, costs or expenses based on the sales in that period, for instance. So you can do these much more dynamic allocations. And if you think about how much time you spend calculating journals at the end of the month, and it can go into company as well. But if you think about the time you spend calculating it, then reconciling it, then pushing it in, then triple checking it, this process does it all out of the box in one instance, and it gives you all the history. So if I just flip back over to another of my setups, so I've actually got a setup of an intercompany. Bear with me, I'm just going to find it and then push it through. So this is my intercompany dynamic allocation. Okay, so if what I can do is in the background, I can preset and build out allocations. Now you can have them automatically running. Yeah. So I can generate them, or just view my allocation log, or I can manually post them myself, right? So here are some examples of my allocations that I've posted, right? So what the nice thing about it is actually what it has is the ability for us to actually go into whatever journal that is created. So this is a journal, this is the output. So what it's done is automatically split my benefit costs based on the number of employees in each department, right? What it will allow us to do is, so this is the end result, this is the journal that's been created. I can then go into what we call the allocation snapshot. So this is telling me the rationale and the methodology, which you guys can document and attach if you want into the setup. The source, so it's pulling it everything from benefits, yeah. So, and you can see the source pool calculation. So it will actually allow you, and I'm just going to pop this up. So it'll just say, right, this is the rationale. So these are the accounts it's going to include, yeah, and this is the balance of those accounts as a pre-allocation. It will then post, and then it will calculate the basis, right? So it's going to say, I'm going to split these benefits based on my salary and wages expense accounts, okay? So then you can again see the basis. So I can click on this. So if you think about what your auditors want to see, they want to see, how have you figured out what to post, right? So then it said, right, I'm going to split that benefit account based on the balances of my department, my salaries across my departments, okay? So I'm going to look at what I've posted into my salary account for each of the departments, and then from that, I'm going to calculate a percentage, right? And then split it. So what the system will then do is then do the dynamic splitter calculation on that percentage, yeah? We'll take the amounts from the source pool and we'll split it across those departments in that way. So this is consistently based and managing that through, okay? So this is what we call automatic allocations. And so from my perspective, I think this is really powerful if you're doing lots of end of month journals. A lot of people can just get away with static allocations, but you can see some of the power. So a really good example of this is I had somebody that wanted to split out, overhead cost across projects based on the hours worked on that project, for example, right? So what we did was we built a basis that said, right, I'm going to use the source pool is going to be my expense, my overhead costs, yeah? My basis is going to be the timesheets by project, and I can do it by customer as well. So if you think about how, if you want to get visibility of profitability by a customer, that's a lot of work, right? But we can automate that, so we can do it based on logic. I had a customer that wanted to split out the work they did on each project, the costs on each project each month based on the hours worked. So they wanted to reallocate overhead costs. So, and we used dynamic allocation to do that. So we looked, so the source pool was the expense nominals. The basis was the hours, the timesheets that were entered into the system. We used the hours, and then we basically did the journal to split it out across projects. So they were actually able to get a true visibility of cost per project rather than having to assume a cost per project, which again, from a profitability perspective, makes it really, really powerful. Okay. So I'm just going to pause on that there. I had a question. So yes, so can you recognize revenue based on timesheets? Yes, with projects. So projects gives you the ability to do revenue recognition based on a percentage. Mostly it's based on a percentage complete, or but you could do it based on a percentage of budgeted hours as well. So there is some ways around that. So I'd love to touch base with you on that one in particular to understand your specific scenarios, but I think we'd probably be looking at projects in order to do that. Yes, okay. So you can do that with projects. So projects adds even more functionality around milestone based, percentage complete, etc., and time based as well. So there's a lot of functionality around that that we can pick up if you'd like to. Okay. So we have gone through, just to keeping a running total. So we've gone through intercompany, we've gone through revenue recognition, we've gone through dynamic cost allocations. From a bank reconciliation basis, I am just going to give you a quick overview of how we can manage things like rules. So what we can build is, and I might need to swap over just to see if I've got a rule set up here. Yes, I have. So this is we have the ability to build in rules. So what we can say is that If the document number and the date matches, the amount, the document number and the date match, automatically match it. You can also do many-to-one matching. So for instance, if you receive a payment that is matched to many of the of invoice, you can do that. So you can set up rules around that. You can also set up rules to create a transaction as well. So in this case, we can group them by document number, and it will automatically match if the document's the same and the amount's the same. So you could do both many-to-one and one-to-many. You can also create, like I said, general ledger transactions. So you can create a journal off of the back of a transaction. So classic example is if you get things that slightly differ each month. So maybe it's your electricity bill, but you know that it's electricity. It comes with the same direct debit reference every month. You literally just set up a rule to say, right, bring this in, and when it is, create the general ledger posting. So it's really, you can do both, like what I call rule-based matching and rule creation of general journals as well, which is cool. And there's more to come as well. They're looking at things like customer and supplier automations around that as well. So that's quite exciting. Okay, realizing that I'm rapidly running out of time, so I'm going to spend the last few minutes based on some reporting elements, if that's all right with everybody, just to give you an idea. So we talked about things like consolidated reports, but reporting goes a lot further than just financial information. I think this is one of the bits that the reasons that people don't automate reports is because they're having to pull information in, like for instance, headcount as an example. So I'm just going to go through and just show you some examples of how we can automate reports. So there's a couple of ways that we can build an automated report. So the first thing is we have to automate the entry of dashboard, the entry of information in the first place, right? So I'm going to have a quick look at things like projects, right? So the first thing is that where people see challenges is firstly around multi-currency. So you'll notice as I'm flipping around, you'll see some stuff in GBP because I'm a GBP company. Some stuff is in UK when I'm in the UK, but then when I consolidate, it's in whatever currency that consolidation's in. So the first thing is we're not limited to currencies. We can manage that. We're also not limited to just financial information. So we can actually store non-financial information. And if you're working with projects, things like being able to get utilization reports based on timesheets, etc., per consultant is all possible within the system. If we get time, I'll show you some examples. But it doesn't have to be things like timesheets. It can just be values that you want to upload each month. So I had one customer that wanted they were in utilities, they wanted to upload kilowatts, for instance. So each month we could push it through the API, we can upload it via spreadsheet, the kilowatts, so that they can get things like average revenue per kilowatt. If I put that into other examples, it could be average revenue per consultant. It could be average revenue per customer, as an example. So you can start to see those KPIs that you as a business hold yourselves to, that you have to pull data out to produce, can all be done within your finance system. But not only that, but we can do calculations based on it. So you can see here I've got my revenue, I've got my kilowatt calculations, and I've got my average revenue as an example. But when we post a transaction, so if we just pop under here, we post a transaction in those nominals against those dimensions. So we talked about dimensions very briefly at the beginning of this conversation, but it's a real big win for what we're talking about here. So for example, we post against a project, and that project can hold the project manager, it can hold the type of project, it can hold all sorts of things, right? So we can report by, say, project manager. We post against customer, so we can hold the customer's industry with all of our custom fields. We can hold the account manager, so then we can get revenue reporting by account manager, or by customer, or by customer type, or by customer industry. So an example of this is what we can see here. Yeah, so I'm looking here across types of products, but I can drill down and see the products. Across customer industry, I can see the revenue analysis, types of projects, project managers. So that dimensional allows me to produce on-demand reporting that people can access whenever they want, because all of the data is automated as it comes in. All right. And I even have the ability to go in and go, actually, well, what does that look like? how do I drill down to that? So I can drill down to the GL postings, and you'll see in the GL, I actually hold the customer, supplier, employee, item, project. Yeah, so it's all in there for me to play with and to look at and to drill. And I can actually keep going, and I can drill down to the journal. I can drill down to the purchase invoice. I can drill down to the sales invoice if I want to. If I click on this one here, I can drill down to the customers that sit under that industry. So in finance, these are my customers, and I can see their revenue, their budgets, their actual versus if I wanted to. And then I can drill down again into where does that information come from? What is making up that? And I can actually drill down to the originating transaction that it comes from. So from an automation perspective, you can see firstly, how easy it is to automate the incoming data and get it into the system faster, but actually how easy it is for us to then step away from that and manage that through. So unfortunately, we've rapidly run out of time, and as people will know who know me, I can quite easily go through and talk about Intacct forever, and I won't do, I promise. So I think just to sum up then, so if you found this useful, please do, or you want some more information, you want to explore Intacct, there's a couple of things you can do. If you'd just like to have a conversation with myself or one of the consultants, please do reach out. We're more than happy to jump on a call and have a conversation and just start that discovery process to figure out what modules you need, what integrations you need, and take that forward, what automations you need. We actually have some upcoming webinars on automating AP, which is accounts payable, so the purchasing side. We've also got one on AR with YayPay and Sage Intacct, looking at both sides of the coin. And we've already got an existing webinar. So if you're using Salesforce at the moment and you want to explore that, then you're more than welcome to go and do that. And you'll get a copy of both this recording and the slides after this call. If you have any questions, please, you guys have been great. I've been popping a few questions in the chat as we're going, but if you have any more, feel free to reach out to myself. Reach out to myself directly. It's hannah.monroe@itassolutions.co.uk, or just email the team there on info@, and we'll pick that up as well. So I really hope you have found this useful. I hope it's shown you some of the power of Intacct. And if there is so much more. I was really struggling to get a condensed version. There is so much we can do depending on the type of business, the type of organization you are. So would love to jump on a call and have a conversation and actually figure out how we can help you automate and do that. And if you're in the midst of a financial transformation piece at the moment, please don't forget to join our financial transformation live. So we talk about process reviews, process analysis as well. So thank you for your time today. It's been great. And if you've got any further questions, then please do reach out.